Hi everybody, good week. Vladimir here with you. How are you? In this video I would like to go over the pips carry. I will not explain the strategy, I will go over the last trades we had and will explain them. But before, guys, I just want you to understand something very important. Pips carrier never meant to be a main strategy and the only strategy a trader should trade, because it's very simple, very easy to use, and very profitable if you use it right. There are so many trades based on this strategy. You can find 1 or 2 trades per week. You can find weeks, of course, with 10 trades. These things also happen, but usually the standard is between 2 and 4 trades per week. Trading the currencies pair that I recommend on my on the PDF book you get. So why I still think it's enough? The answer is simple. If you use it right, you can make between 100 to 200 pips monthly. Does it sound a lot? It is a lot. It is a lot, and I will explain you why. Because 100 pips, right? If you use 1 to 10 leverage only, if you earn 100 pips, you make 10% profit on your balance. 10%, that means if you have $10,000 in your account, you will every month you will make $1,000 extra, right? You can trade only pips carry because it doesn't take any time. There are a few trades only, and it takes only few minutes, right? And this strategy designed to be an extra strategy. This strategy designed to bring the something that missed in the intraday strategies and the long term. The something in the middle, I call it, right? So now let's go over this chart, and I want to show a few trades from the last 2 weeks. That's all I want, 2 weeks, right? So let's go and begin with the first one, which is British pound against the Japanese yen, right? This was the trade. It was on 15 of this month, 1 hour chart, right? And here we got a signal. Here we got an entry and stop loss above the last high, right? So 25 pips stop loss, 26 plus the spread is 30 pips, and here we didn't get the profit, and bam, we kicked out, right? This first trade lost, so we write lost trade, and we keep going and we keep waiting for the next trades, right? The next one we got was on the euro dollar 4 hour charts. It was here, as you can see here, right? 11 of October. So what happened here? Again, the MACD, you know the rule. If you read this PDF book, you know the strategy, right? The MACD and the stochastic here. So what extra points should we remember? This 140 was a resistance line combined with divergence, a bearish divergence, right? Combined with bearish divergence, excellent entry point. The stop loss is 100 pips, and we got more than 100 pips move, but the first target is 1-to-1, right? So you get this profit, and you have 100 pips profit. You move the stop loss to break even for the second target, the 20% for the trade, and you kicked out here. So you earned 100 pips, right? 100 pips on the first target. Right, so excellent. So we already in a total profit balance. Why this trade was good? Because it was on a resistance line combined with divergence. This is my preferred trade. You know it already. If you read the book, 100 pips stop loss, right? And of course the first target reached. The next trade is British pound against the dollar. Let's see. Here is the trade. Right here. It happened on 8th of October, right? So this is the trade, right? Again, What can we see here? We saw this move, we saw a correction, and I told you in the book, if we get a trade after a correction, and here we got a break of the double doji, this is an extra, right? This is an extra. And for those of you who follow my free ebooks, you know the double doji, and you know how I love it. So that's why, again, okay, we got a signal. After a correction, we get a signal. Again, MACD crossed here and the stochastic. So the stop loss is 35, 40 pips. And we got the first target here. Again, first target closed profit 80%. The second target was kicked off on break even on 0. So we got 140 pips profit. And we got 30 pips minus. So we are already in 100 pips profit from this month. Right? We can stop trading. That's what I want to understand. That's what I want you to understand, guys. 100 pips based using the leverage 1 to 10 at least only, and you get 10%, extra 10% profit on your balance. That's all. That's all. You don't have to look for more. Guys, please, my friends, please forget about these dreams to get rich quick. If I have 10,000, I want to make 10,000 per month or per week. Guys, please forget it. This is the real market. It's not a dream market. Please try to trade like a serious traders. I still think I trade by my own 10% per month. That's all. If I get it, I stop. If I get it after 2 days, I stop. If I get it after 2 weeks, I stop. I don't trade anymore. Alright, 10%, that's all what we should have to look for. And if you still want to look for more, just use this strategy. Use this amazing pips carrier strategy to make extra income. That's all. Alright, and the next trade will be on dollar Canadian, and this one I want to show you something very interesting, right? Very interesting. Take a look. Dollar Canadian, and we have here on 27, if I remember right, yes, 27 of September, right? This is 2 weeks ago, and as I said, we will go over the 2 weeks trade. And here what you get, we get this first signal, right? We should enter here. Take a moment to think about it. Yes, we should, because this is support line combined with some kind of divergence. Right? We should enter, and we got some move up, but then we kicked stop again. So the stop loss is below the last low, which is here, which is 25 pips. So we lost 25 pips. But then, bam, another signal right here on this candle. Another signal on the same support line, and an engulfing. This pattern called engulfing. What should it mean? It should mean we are going up. So again, in this point, if, for example, if you traded one lot trade on the first one, let's say here, and this time you can trade even bigger, because the possibility that this trade will make the move is very high, very high. So you can take, instead of one lot, you can take 1.3, 1.4, and then you profit more, right? You shouldn't duplicate it, but you can take bigger lot size, right? So again, the entry here, the stop loss here, which is below the last low, which is 40 pips, right? 42 pips, 44, and here we go. The first target. And then the second target reached, which is twice bigger than the stop loss. And that's all. Guys, did you see it? Did you see it? 5 trades at all. And we got 30 pips loss on the first trade on the British pound yen. And the 25 pips lost here, which is 55 pips loss at all. And then we got 100 pips profit on euro. 40 pips on British pound, and here we got 40 and 80 pips profit on the dollar Canadian, and you get between 100 and 200 pips. That's all you should target for a month, guys. Alright? Please, I just want to be realistic. I don't want you to trade with the dreams, guys. Don't dream, please, 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 don't dream to make quick money. Right? Just dream to make a quicker money. That's all. Thank you very much for your time. Have a great week.